Hi, my name is Eric William Wellstrand, and welcome to Section 8 of this Introduction to the Economy of Saudi Arabia and the other GCC countries. This section is titled Banking, Finance, and the Healthcare Sector. If you're joining us for the first time, please see Section 0 for the purpose, outline, and disclaimer for this presentation. The banking and finance system in the GCC countries is relatively well developed. Of course, there's room for improvements, especially with regards to financing for small and medium-sized enterprises, but in the grand scheme of things, it is not too bad. Banks tend to dominate the financial world in the GCC. You might be thinking, don't they do that all over the world? Partially true, but let me just quote an IMF working paper. Non-bank financial institutions have a limited presence in the GCC. Who are these non-bank financial institutions? In other countries, that would be hedge funds, insurance companies, independent mutual funds, pure investment banks, and so on. Another issue is that within the individual countries, the top domestic banks dominate. Of course, and they dominate more than what they have a bigger share of the overall banking industry than what is common in, say, other Western countries. Of course, despite this, regional GCC banks are relatively small compared with international giants, and the whole GCC banking sector is actually a smaller percent of the world financial system. As a smaller percentage than the size of their economies should normally lead to. When saying who has the biggest financial system or biggest banking sector in the GCC countries, depends a little bit how you measure it. But generally, due to size, you'll always see Saudi Arabia coming out on top. It has the most citizens, it has by far the biggest deposit base. At the same time, it is not the most developed market, and by far the most aggressive market. For instance, it has the lowest loan to deposit ratio. Also, if you look at the table on the left hand side, you'll see banking assets as percentage of GDP. You'll see Bahrain tops the list, followed by the Emirates, Qatar, and Saudi Arabia is quite far down. Traditionally, the United Arab Emirates and Bahrain have had the most advanced and open financial systems. Right now, Bahrain might be changing. I'm not going to discuss political issues in this presentation, but there is currently a crisis developing in Bahrain, or has been going on for a while, and I have heard rumors that because of the unrest, financial institutions, at least international financial institutions, are relocating, or at least not expanding in Bahrain. And when they relocate, they usually would then relocate to Dubai. The list on the right-hand side shows number of top banks domestically in the top 1,000 banks of the world. The list of the top 1,000 banks is produced by the banker. I believe they have used Tier 1 Capital as a measurement, or how to rank them, and as the banker is a subsidiary of the Financial Times. Again, you see Saudi Arabia on top, followed by the Emirates, Kuwait, Bahrain, Qatar, and Oman. I'm trying to say who has chosen the right model, the best model when it comes to developing their banking industry. I'm not going to really try to pass any judgment there. Right now, we're currently in a financial crisis, which basically we've been in ever since the subprime crisis in America. Currently, we have the euro problem, the sovereign debt crisis in Europe. So right now, it might be tempting to say that the ones with the least aggressive systems, like for instance Saudi Arabia, they're doing better, whereas Bahrain and the Emirates are hurting more. Basically, we need a long time horizons to answer that question. I'm not really going to try to do that here. Well, this brings me to the next topic, which is profitability. The banking sector in the GCC have stable sources of earnings from traditional banking. Net interest margin represent the main source of income, ranging from roughly 50% of gross operating income in Qatar up to almost 80% in Saudi Arabia. As with banks around the world, the current financial crisis has led to losses from securities investments. They mostly affected Saudi banks and Bahraini banks, but all in all, losses were at quite comfortable levels compared to international competition. Together with Saudi Arabia, the banking sector in Kuwait has been one of the most profitable within the GCC in recent years. The retail banking sector in Bahrain has been the least profitable. Of course, the sector in the Arab Emirates have suffered from the local property bubble in Dubai. As mentioned in the previous section, this crisis is not completely over, but it seems to have stabilized for the moment. Summarizing, basically most of the banks are involved to a large degree of what we call traditional banking, compared to, say, more aggressive banks in the Western world, and they have relatively strong capitalization. Much of this capital was built up during the period with high oil prices before the financial crisis hit, allowing to have a buffer. Please also note that while I'm making this presentation, things are happening very rapidly in the world of finance. For instance, by the time you listen to this, banking in Bahrain might be completely dead, might be a historical memory, but right now I can't say that because it's still developing. I can, however, say that what the banks are being mostly criticized for, at least domestically or regionally, is not being good enough at supplying financing for the small and medium-sized enterprises. They're only there for the big companies. For instance, if the Saudi bin Laden group wants to have a loan for a huge construction project, that would be no problem. Whereas if a grocer or small business wants to try to get a loan, that's going to be quite difficult. I know the government is working a lot on the regulatory framework and trying to change this. It's one of the big policy pushes by the government recently. But again, you'll have to see in the future how that works out. I'm going to leave this section by showing you a section from the list produced by The Banker, the one that ranked the 1,000 top banks. These are the top banks in the GCC. On the left, you see the world ranking, of course, followed by name, country, and again, they're measured by Tier 1 capital. You see that the biggest bank in the region is the National Commercial Bank here in Saudi Arabia, followed by the Emirates NBD, and so on. You'll see the list more or less follows the division I use, or the size difference I talked about earlier, being Saudi Arabia is the biggest, followed by the Emirates, and so on. We're now going to move on to what's called Islamic finance. Islamic finance is an important element of the financial system in the region, and a market that is growing despite the current crisis. Of course, this is from a small base, so the percentage numbers can be pretty high. I'm just going to give you a general overview in this presentation, as it is an introduction. I assume most people listening here have no previous knowledge of Islamic finance. I can also highly recommend the English Wikipedia page. I believe they call it Islamic banking there, not finance, but it's quite good. Basically, Islamic finance is all about the ban on riba. Riba is an Arabic word, and it's usually translated to English with using the word usury. The word riba means actually excess, increase, or addition. According to Sharia terminology, this implies any excess compensation without due consideration. Now, of course, what does that mean? And basically what it means that is a ban on interest rates. For instance, when you say consideration, the interpretation of that word does not include the modern financial concept of the time value of money. For those of you who are interested in history, it might be interesting to note that Europe also, in the Middle Ages, for many, many years, had a ban on interest rates. At least the way we solved it in Europe was we had a ban on interest rates for Christians, leaving non-Christians were allowed to do it. For instance, the Jews were the ones who were most famous for it. And of course, an important part of the story is that Jews were often banned from other types of work, which sort of led them to being a high percentage of the number of money lenders and so on around Europe, which also you can say is maybe part of some of the stereotypes and later anti-Semitism grew up around this. The money lender has never been a popular person, as it goes for basically for any country. But back to Islamic finance. So of course, people in the Islamic world have the same needs as people in the rest of the world. Enterprises need loans, people need home loan, car loans, and so on. So how do banks get around this, and how they're able to supply the financial services that the country needs? The concept of Islamic banking is all based on the concept that one way or another, the bank and the loaner are form an entity, a partnership, where they share the profit and loss. I have listed many ways that can be done in the PowerPoint presentation. I'm not going to talk about all of them. I'm not even going to try to pronounce their Arabic words, it's too difficult for me. Instead, I'll give you a simple example on how this can work, for instance with a home loan, which is something most people experience in their life.